Bitcoin is the bear market over and done. With has Bitcoin found its bottom and it's time for accumulation mode to go into overdrive? These questions or ones like them are on the top of every crypto investor's mind. Well, it's time to start getting them answered. Near the bottom of bear markets can make or break a portfolio. So are you going to make it or are you going to break it? Well, there is no doubting. We have been in the midst of a rally. Checking out Bitcoin price after the capitulation dumped down to 17.5K. We can see the price has stutter-stepped its way back to 25K with a series of higher highs and higher lows. So what's the deal? Are we breaking into accumulation before the bull, or is this just a standard bear market rally? Well, let's take a wholesome view and look at both sides of the coin. So to begin, have we moved out of the bear and into the Bitcoin accumulation zone? There are some charts and stats out there which are hopeful that this is the case, comparing the 2018 to 2019 downturn calm before the storm and then the final capitulation and bottom with what has happened in this cycle. You can see the two are very similar. Now a titan of crypto on Twitter dives deeper into this, including the previous cycles and a certain indicator. They said Bitcoin bottom confirmed. Historically, it took 8 weeks on average after a bottom was in for logMACD to cross bullish, if we consider June's low as the bottom. It's been 8 weeks since then and weekly logMACD is about to cross bullish. We saw a couple of charts and a technical indicator bull market is back on. This isn't foolproof evidence. We're out of the bear woods, but there are a few more indicators flashing, like the Puell multiple. This indicator explores Bitcoin market cycles from a mining revenue perspective, as the multiple is calculated by dividing the daily issuance value of Bitcoins in USD by the 365-day moving average of daily issuance value, looking at the multiple. When it gets high and into the red, this indicates that current miner profitability is high compared to the yearly average. As such, there is incentives for miners to liquidate their treasuries and sell pressure should be coming. As we can see, high values and getting into or near the red has also signaled the top for every Bitcoin cycle, but the opposite is true for this multiple. Low values indicate that current miner profitability is low compared to the yearly average. Income stress may become a factor for some miners, and they may need to start reducing hash power by switching off their rigs. This increases the hash share of the remaining miners who can sell fewer coins. Checking out when this indicator has gotten into the green oversold area historically, it is followed by a few months of consolidation in previous hits of this green area. Bitcoin has never fallen back into the oversold area within 6 months of officially breaking out of it. So do we have 6 months of breakout bullish coming? Well, what about the Guppy multiple moving average GMMA? This is a technical indicator that aims to anticipate a potential breakout in the price of an asset. The term gets its name from Darryl Guppy, an Australian financial columnist and book author, who developed the concept in his book, Trading Tactics. The GMMA is a trend-following technique composed of 12 EMAs or exponential moving averages. The 12 EMAs are separated into two groups, a short-term group of EMAs and a long-term group of EMAs. Short-term EMAs are usually green while long-term EMAs are usually red. The crossover of the short and long-term EMAs represent trend reversals. If the short-term crosses above the long-term, then a bullish reversal has occurred. Conversely, if the short-term MAS cross below the longer-term ones, then a bearish reversal is occurring. Well, looking at this chart, we can see in this cycle the red crossed the green, indicating that we were going into a bearish reversal, which happened, and the green hasn't crossed back over the red since. Wait, isn't that bearish? That means a trend is still there. Well, yes, it does, but then it doesn't. Zooming out and adding their tweet, a mustache L Crypto Proof on Twitter pointed this out. He said Bitcoin bottom indicator every time green GM Guppy. Multiple moving average cross red GMM and BTC held the 200 weekly moving average. The bottom was in for BTC and the price went parabolic thereafter. This happened in 2015, 2019, 2020 and 2022. But technical indicators aren't the only indicators that things are starting to flip bullish for Bitcoin. On-chain indicators are showing similar things. Like Bitcoin has officially crossed 1 billion total addresses used, and it seems people around the world are using this downturn to accumulate. The number of people who own a full Bitcoin or more just reached over 1 million people. But remember, I said we'll look at both sides of the coin. We just looked at the indicators for a bull. Now let's switch to the bear. Why it's possible. Everyone should know Bitcoin moves in bull cycles and bear cycle drawdowns, and if we have already hit the bottom back on June 18th, this would be the shortest bear market in the history of Bitcoin. From this chart we can see historical Bitcoin bear market drawdowns. After the first halving cycle, the green line we can see it took 411 days for the bottom to come, and it was a drawdown of 85% after the second halving cycle. The blue line we can see it took less time, only 364 days hit the bottom, but a similar drawdown of 84%. For this cycle, June 18th was the bottom at about 17.5k. Then this would have been only 221 days to the bottom with a drawdown of only 74%. Now the difference between the lengths of the first two cycles, 411 days first, 364 days second, was just 11.5%. The difference between the lengths of the second and this cycle, 364 days second and 221 this one, is 42%. Now I know bear markets are getting shorter, but a 42 difference this time compared with just 11.5. The two cycles before is major, and speaking about previous cycles, Bitcoin dominance has been getting crushed lately down to below 40%. This would be the first cycle in which Bitcoin dominance wasn't pumping towards the end of the bear. In past cycles it has reached over 70% before we entered another explosive alt season. So what could put an end to this rally? What could be the catalyst putting an end to this bear market rally? People need to realize this bear market rallies will go higher than anyone thinks, to the point where people start thinking that the bear market is over. In terms of a catalyst, we have to speak about those Mt. Gox coins getting released at the end of the month. Now with the Mt. Gox hack, which happened all the way back in 2013, they recovered 200,000 Bitcoin back to the users. 24,000 of those coins were sold in 2017. At the end of this month, 137,000 will return to the users, worth over $3 billion. The average buy-in price from the users, just $300 per coin. At today's prices, users are up 65%. They were forced to huddle, and now they have the ability to dump those BTC. I think some of them, upwards of 30 to 50% of users, will take advantage of the gains and dump the BTC. For a lot of them, that is life-changing money they haven't had access to for almost a decade. Many are going to want to change their life, and that is going to cause a bunch of unwanted sell pressure out of nowhere. So my friends, I wish I could be the one who tells you what's going to happen in the short term, but I am a long-term investor, and these short-term movements won't matter in the big scheme of things. This could be just a bear market rally. But we are near the bottom, and accumulation during these times is all I'm thinking about. If you're not subscribed, make sure to subscribe, as we put out daily content to keep you up to date on the current marketing news. Thanks for watching, and we'll see you in the next one.